Yeah. Okay, so you guys are ready that we can go live?
Yeah.
Okay, so I think we are at a point that we are now discussing more. We are moving a bit from financing for buyers to mortgage issues that are more related to sellers. This is another very common question that you will come across, especially if the market is volatile and not stable. Your clients will ask you this question. And the question is that I'm thinking of selling my house, but should I sell my house first or should I go and buy house first? Now let me give you a couple of scenarios. If it is a hot market, they will think that they will sell their house very quickly, but then they may not necessarily be able to find the house that they're looking for because everything is going multiple offers. On the other hand, if it is not a hot market, if it's a slow market, they will say, okay, if I buy a house first, then what if my house doesn't sell? And if it doesn't sell, then that means I will be in trouble. I will pay 2 mortgages and things like that. Now, this video is mainly applicable to the second issue, which they bought a house and they're concerned what if their current house doesn't sell. There is something available from most financial institutions. It's called bridge financing. Basically, the way it works is that the amount of equity that they have in the current house that they're living, they will consider that and they will give them a mortgage for the new house. So that way they don't need to come up with a down payment. Because if you buy a new house and if you close it, you need a down payment. Bridge financing is like a bridge between the current house that is not yet closed, but the other one that is bought and closed. Now, this is the key. It has to be sold. So even the house that they're living in, it has to be sold. Otherwise, they will not give bridge financing. It's only that the closing date is different. Some people don't understand this and think that, if I have a bridge financing, it means it will solve every issue. No. If it has to be sold on a paper, you have an agreement of purchase and sale that shows that the property is sold, then the bank will give them a loan based on the sold price.
Question. So sold, does it mean all conditions have been waived?
Affirmed, yeah. Firm sold. Firm sale, yeah. Of course, if they have enough equity, there are other options available. For example, banks might give a second mortgage, line of credit, but this is more applicable in case that they bought a house and they're selling a house. And I have interviewed someone from National Bank. So let's watch and he explains how this works. So any questions on bridge financing?
Will that apply to buying a developed house as well, for example?
Yeah, as long as the existing home, which is the one that you're living, is sold firm. The reason is that bank wants to be sure that they're not in they don't know how much the property will sold, but once it is sold firm, they know exactly how much loan to give you and what is the equity in the home. I mean, but yeah, it could be applicable to anything. But see, this product, if some people are not aware of, they might panic, and most consumers are not aware of this. But you as a real estate agent, and again, you're not a mortgage broker, but you're trying to make the deal happen, and this might help you if you're aware of bridge financing. Next time if you come across the situation and if they're concerned what to do, whether they sell or buy, or there is, as you say, the new construction that they want to buy and right away buy so that they don't lose the opportunity. So you say, okay, let's buy it. Worst scenario, you will pay a month or two mortgages. That's the worst scenario. But if this product that you don't want to lose, that you want to buy, and it's your dream home, then let's buy it. I mean, I have come across quite a lot of clients that they keep on looking, and they have some specific criteria in their mind to buy a house. So that's why they will never consider to sell unless they buy that specific home that they're looking for. So this product could give them a peace of mind. You know what, let's buy it when you find it, and then we will put your house in the market and sell it. The closing dates, we will try to be on the same day, because sometimes both agents, both clients might be flexible and everything could fall under the same day. But if it's not under the same day, as long as we can sell it firm before a couple of weeks at least before the other closing date, then we are okay. That means there will be a month or two that you will pay 2 mortgages. But I think please make sure that you make very clear to them that this is not in case if the property does not sell, then they might be in trouble. Sell firm, I mean.
So how long is the bridge financing available for? Usually the banks offer for how long?
I'm not aware of the exact timing, but I would say it is flexible. I would assume at least, yeah, a couple of months should be okay. Yeah. Or maybe each banks might be different, but I would assume this is more like an emergency scenario, which usually is a couple of months or 2-3 months. Okay. Now, I think, and again, I think I'm emphasizing the same point, that we never claim to be a mortgage broker or consultant, but when your client is selling, there is a lot of savings that they could have. This video was prepared for a seller, but I think for you it is important. Don't you think the more information that will save your client money, time, and problems, they will appreciate that? And then they will be more loyal to you, and they will refer more clients to you. Remember that people want to be attached to winners. If they have this image of you that they will feel confident in you, then they will refer their friends to you. If they had a bad experience, they will never refer anybody. For example, I had a cousin that was in moving business. I referred them to, actually, Nilo's mom was moving, so I felt okay to refer because it was a little bit of a closer relationship. So I referred, and they complained and they were not happy. I would never refer those people to anyone else. And in all profession, that's the case. If people are not happy with you, then they will not refer. One of the ways to make them happy as a real estate agent is that you will give them these bonus information. And this is a very good information that unfortunately most home sellers are not aware of, which means that they can save a lot of money on their mortgage when they pay it off, and they're also not aware of other issues such as penalty. And this is a video that brings some of those savings, and you might take a note, and maybe in future transactions you might come across issues like this that you might be able to help your client.
When you're selling your property, you might be charged some big
Okay, so a couple of things in that. If you have any question, hold on to it. Did I move back? Oh, no, it's I'm there. It is prepayment, which may not be something that every seller will have the option. Basically, when you pay off your mortgage, there is a penalty on the balance outstanding. So whatever you're owing, they will calculate. It depends. Sometimes it is the interest differential from the time you got and today's interest, posted interest rates. Sometimes it is the 3 months interest only penalty. But whatever the case might be, most of the time the amount that's outstanding might impact the penalty that you're paying. So if you have some money available, because now they are selling this property and buying another one, let's say bigger one, maybe they have some money to put more down payment. So if they plan and they give if they have the option of prepayment, some banks allow all the way up to 20%, all the way up to 20% that you can give the prepayment. Then that will reduce your penalty. So let's say if your mortgage owing is 300,000, 20% of that is 60,000. So some people might have the 60,000 to give it and bring down their penalty. And even I think the interesting point is that sometimes your maturity date, or sorry, the date that it's allowed 20%, let's say per year. So that year is a date that you got the mortgage. So a week before that date, you could give the 20%, and a week later than that date, you get another 20%. You might be able to pay down 40% of the outstanding mortgage within a week or so. Did you get it?
Yeah.
So there is a date in the middle, a couple of days before that you give 20%, and then a couple of days after that you give another 20%. That means your outstanding mortgage is, but that option is not available for everyone. That option is for people that have access to money. The other one is porting, which he explained, which probably we are aware. That means you can take your mortgage from existing home to another home, and that might save you money from penalty. Questions? Clarifications? Sorry?
So I got it.
Yeah, good. Okay, again, if you remember, after we have come from the break, we are more focusing on the seller, and I think I'm sure you guys are by this time in our presentation, you're realizing that how mortgage broker can play a good role in making you successful. If you have a good relationship with a good mortgage broker that can give you advice and can help your client, it will come a long way for you in your success. So try to find a team member to be part of your team, so that you can work with him or her and then try to find clients. I have seen mortgage brokers going to open houses together with agents so that they can work with the client. You can advertise together, because you're totally looking for two separate kind of services, so there is no competition. Actually, one can help the other, and mortgage broker could come a big help if you're working together, and especially if it's someone who's knowledge and knows and informed and have access to different financial institutions. It can make your life easier, and it might be a help in your success. So this is another kind of scenario. This is somewhat similar to the basement scenario. There we said if you cannot afford the monthly payment, you will finish your basement so that you have an income. Now in this scenario, people are selling their houses because they need more money. Now, yes, as a real estate agent, it might be in your best interest to tell them just to sell and downsize and buy another house, but in the long run, they may not be happy with you because that's not the best advice you have given them. Maybe if they sell their house, they have to pay a huge penalty. They have to, when they buy, they have to pay a land transfer tax. They have to pay you commission. You know, just the property changing hands from selling this property and buying another one sometimes could cost somewhere between $30,000 to $50,000 just for changing hands. So if they're downsizing from 500,000 home to 400,000 home, they might think that they will get 100,000, but in reality they might only get 50,000, because the other 50,000 is land transfer tax, real estate commission, penalty on their mortgage. So if you tell them to sell, that may not be the good advice. Might be a better advice might be to say you refinance. At one point, refinancing was available all the way up to 95%, but rules have changed now. It is at much lower now. And on investment properties, actually, you have to have minimum 20%, but on your own home, it's 90% refinancing. At one point, it was 95. I have heard even 85% refinancing. So, but I think, and again, I think at least as a real estate agent, you have to be aware of these basic products that are available in the market about mortgages. And so far we have discussed different topics and different scenarios that will prepare you for a conversation, right? So I mean, although as a real estate agent you're not expected to be a mortgage broker, but when your clients will ask you the question, they want to get your advice. If they have selected you as their real estate agent, they want to know your opinion, and you should have some input in the conversation. So let's see, I think most of you might be aware of refinancing, but let's see if this video can add any more value to what you know.
Sometimes we have sellers that are selling their house simply because they need money, they need cash. Do they really have to sell their house to get that cash, or there is other options available? Today, we have Victoria, mortgage specialist, working in this industry for 20 years, that will help us to find a solution for this issue that we have. So Victoria, thank you for coming today. Our sellers are in this kind of scenario. How can you help?
Well, James, we can actually refinance the property up to 95% of the value, as long as the client has good credit and also income to verify. If you can't verify income, as somebody who's business yourself, for example, you can still do 95% financing as long as the credit is good as well. This means, James, that the customer doesn't have to sell the home. They can continue living there, avoiding real estate fees, and they're able to compare with that.
Thank you, Victoria, for helping our sellers to stay in their house, keep their home, and still get the cash. Thank you.
Okay, so that product that was 95% is no longer available. It is. This was recorded a couple of years ago. So any questions before we move forward? No? No questions? Okay. Okay, I think this is something that we can elaborate on after I play this video, because this will give you the difference between a commercial and residential mortgage. When you're starting in this business, you may not necessarily start with commercial transactions, but in your lifetime being in this career, you will come across situations that you will deal with commercial issues. If not, even if you're not dealing with it, your clients might have inquiries that they will ask you. So you want to be prepared. And as you can see so far, these sessions are kind of preparing and laying your foundation. So you should have some basic information. And I'm also sure that you guys are appreciating that most of the information shared here is not something that you'll find in a school books. This is more of a practical life when you go out and do real life things, right? So it's less of a technical and legal, more of a practical. So let's watch this, and I think you guys will have questions about this, because this might be something new, and maybe after this we can elaborate on this.
If this is our first investment property, sometimes we think the
Okay, any questions? No questions?
No.
Okay, so let me clarify a couple of points that came up in that conversation that I had with David. First of all, some people will confuse a multifamily residential and they will think that that is a residential mortgage. So for example, if you buy an apartment building that people live as tenants, although it is a residential property, but from a mortgage, from a financial perspective, that's a commercial property. Anything that is more than 6 units, and even some banks 5 units, so to be on the safe side, up to 4 units is considered residential mortgage. Anything more than 5 units in most financial institutions are considered as commercial mortgage, although it is a residential property, but it is considered as commercial. The second thing that I wanted to also clarify is about down payment. If you're buying an apartment building, and especially if you go through CMHC, you might need much lower down payment. CMHC might give you even as low as 15%, as 20% down payment. And as he was mentioning, the interest rates are even lower than the residential. The reason is, there are a couple of reasons. First of all, apartment buildings are very safe investments. Secondly, I think as a mandate of CMHC, it is government's role to promote and encourage more investment in residential rental properties. I was, I think, mentioning sometime in one of these days that unfortunately a lot of investors do not invest in apartment buildings, rental apartment buildings, because it doesn't make much of financial sense. The returns are much lower. They can use the same land, same construction cost, and build a condominium and make a lot more money. So that's why you see a lot of condominiums in the market and you don't see a lot of rental property. So the government kind of encourages, and actually CMHC have even some other creative financing options that if you're going after converting, let's say a commercial something to a residential apartment building, they give you financing and they give you money for even construction. So just to encourage rental properties, because there is not much of a rental stock, especially after 80s. There was not a lot of there were some federal programs that would help you to build and encourage, but after this condo boom, there is not much of a apartment building. So that's why whether you go in Scarborough or even Toronto or Etobicoke, you will see a lot of these older apartment buildings that are in like 30, 40 years old. There is not much of a new stock. As you can see, anything new is all condominiums, because for an investor, it doesn't have as attractive a return as the other one. So having said that, I mean, for example, there is a problem if you're buying an apartment building, especially in this market, because there is a lot of foreign money coming. They are not only buying condominiums, some of them are buying even apartment buildings, because it's a very safe investment. People need to live somewhere. Even if the economy goes bad, still they will live in apartment buildings. So that's why they buy it higher than market value, and CMHC does not appraise it. You know, the issue of appraisal that we have discussed. Usually the CMHC has a problem with your purchase price, so then it is okay that you will give 15%, but you have to come up with the difference, which makes it very big down payment. So you have to be careful of that scenario. So it is all the way from 15% or 20% from apartment building. If you buy a land, some financial institutions may not give you a loan, or if they give you, you have to come up with half of the money, because there is nothing there. There is no income. It's just a land. And for some lands in somewhere north and nobody goes there, maybe you have to come up with all cash. There is no financing available. It depends. So land, for example, is a very low loan to value ratio. I think the other thing that I wanted to clarify is that in case of commercial properties, they qualify and they focus mainly on the building. When you buy a house for your client, they check your credit or the client's credit, they check their income, and they check their credit history. But when you buy a commercial property, of course they check you, but their main focus is on the property, how much income it has, how old it is, how much repairs it needs. They will ask for all those questions. So basically, the focus shifts from a person to a property when you buy a commercial property. They analyze the property. In case of a residential, they just do appraisal and that's it. The main focus is on you, whether can you make those mortgage payments, whether can you afford it, are you able to make those mortgage payments. But in case of commercial property, the focus shifts. They are focusing more on the property and analyzing the property and the income as opposed to you. So when you're involved in commercial, that's why you should take a longer financing condition. So in a residential, generally it is 5 days. In case of commercial, it is generally 1 month or at least 15 days, probably preferably more like a month's time to work and figure out the whole thing. So when you have commercial, I mean also commercial depends if it's an office, apartment building, each has its own complexities. On Friday, we will have a full day of commercial focus and business and sales and how these things are calculated. And again, as a real estate agent, you should have that minimum basic information. Tomorrow, we will be playing less of videos and we will have more of information. I think tomorrow is one of the most crucial days because the focus is more on sellers. And I think that's where the business is, that's where the money is. You should come more prepared by maybe drinking a couple of more coffees because that will be information overload. You will be a little bit overwhelmed. We need the whole 2 hours. There is a lot of information about sellers that we have to work on. So we will finish today. There is no homework, but hopefully you guys will get a chance to work on what we have kind of requested you to do it, which was preparing your bio at least and taking a professional picture and email to the office and let them prepare that for you, and then you can, as a buyer's package, you can use it. Do you guys have any question before we end? No questions?